Do not ignore this pattern. It's a classic M, and if the pattern completes, the stock could be looking for nearly 40% more to the downside. Here we're talking about Super Microcomputer, which is already down by nearly 40% in the last 6 months. And today it gapped down by 9% because Hindenburg says that they have fresh evidence of accounting manipulation. So is this stock in trouble? Because I see a big M for manipulation, and there's a big M right here. A little bit ironic. All told, we believe SMCI is a serial recidivist. What's a recidivist? It is a convicted criminal who reoffends, especially repeatedly. Whoa, shots fired. Icon Enterprises is down by nearly 30% in the last year, and was the latest victim of Hindenburg before this recent attack. All right, well, we're going to come back to that and see how it relates to Nvidia. But first, we want to think about what Jerome Powell is going to do next. This is what a rate cut cycle could look like. That's the next big question. It basically comes down to, will it be 25? Will it be 50? Could it be two 50s in a row? We're also going to come back and talk about this. It's really simple. There's this article we got back in July from Forbes telling us that an imminent stock market correction warning suddenly flashed. Hint, it's about debt. And debt right now is not looking so good in the US. So that's right. Things could be getting worse. But if you've been watching the channel, you know there is a silver lining. This is important because right now we have Nvidia after the bell tomorrow. But just now we got Nordstrom's after the bell today. And we do have other retails up here. So this basically means whether or not the consumer is strong and is going to use debt to fuel their purchases, right? Jerome Powell looks a little bit uncertain there. Well, that's how investors feel right now. But people are not uncertain about Nordstrom's. A luxury retail is doing just fine. Stock is up by 8% in after hours. But this is interesting because, like I just said, U.S. credit card debt is now at an all-time high of $1.14 trillion. $1.14 trillion on credit cards. Whoa. And delinquencies are going up. Right now, we're looking at 10.94%. That's a very high trend for delinquencies. 90 days. We also know the unemployment rate going up. Hey, it looks like Jerome might be making a mistake here. That's right. So is the consumer really all that strong? Well, that's different than whether companies are strong. Looking to semiconductors, very timely research report here from Hindenburg, I got to say. And that's because these companies are already mostly out. Nvidia's after the bell on Wednesday, which will be the 28th. And I think they're really trying to capitalize on the uncertainty which is out there in the market right now. Nvidia is expected to beat earnings on Wednesday by 11%. And we've already talked about guidance. I believe it's going to be good. Let's look here to a couple of charts just as we're taking a break, because this is really important. If we look here to our weekly chart, we've now actually tested, let's get the tool locked. We've actually tested our previous all-time high. That is great. Why is it great? Well, because if this area holds, this is actually support, and we should be able to go to new all-time highs. So again, a lot of ifs. However, we can also note here that we have another daily fail breakdown, and we did reject off the 50. That's the area that was really important for me. If we go back here to Nvidia now, oh my goodness, Nvidia closed up. That's right. Gap downs are for buying. Oh, gap downs are for buying. That's correct. So going into earnings for tomorrow, I just want to see whether or not we manage to get a hollow candle. Remember, the option implied move for Nvidia is quite large. We're going to go through that right now. So with a beat expected on Wednesday and an implied move of 9%, we have talked about that. So I'm calling it 10. So we're basically looking for all-time highs at 139 or to 114, which would be a fairly sizable drop. 114 would be back down here to roughly the 61% Fibonacci number. That's the 114. And 139, hey, that's basically all-time highs. All right, just before we go further, I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up and subscribing to the channel, I would really, really appreciate that. So with a large implied move on earnings, like 9, I saw 10%, but hey, this guy is more of a pro than I am, so I'll take what he says as the guide. And there's also a 50% chance that Nvidia could be within a 10% move. So there's a lot of variance here, and this stock is huge. It's 7% of the S&P 500. This is coming from our tool, the algo.com. These are dark pool prints on Nvidia going back to August 1st, so month to date. 90% of levels are bullish. Dark pool prints are just large off-exchange orders. A lit pool is an open order. A dark pool is off-exchange. So all I'm looking for here is whether bulls or bears are making money. Yeah, they're making a lot of money. They're up $11.8 billion just on dark pool prints this month. That's basically from the low to the high. And because more than 90% of levels are still bullish, what that really tells me is that people are not really cashing out. They're like, yeah, I like Nvidia. I bought the dip. This is really important because we have also talked about how a lot of other investors are actually unwinding their position. Let's look here to one which is very notable. I've talked about this one before. So Stan Druckenmiller, hey, I respect this guy. He's a great trader. If we look here, he had a large position, and now it's a lot smaller. He's reduced it by an additional 87%, and it's a free trade. This guy is an ace. He's now all out of Eli Lilly, and there's been news on that one too. This guy is just an ace. He's in the top percentile of traders. So what does this really mean? It means that if people like Stan are getting out, we need fresh buyers to step in and absorb all their sells. Otherwise, the stock stays range bound or it goes down. Oh, so this is actually a really good sign because everyone who's been profiting from like, I don't know, like $40 all the way up here to like 150 even before, this stock was not that high that long ago. It was at 39 and then it went to 150. Whoa. Yes. So during the whole rise, people are now trimming their positions and we need fresh buyers to step in. Otherwise, the chart won't advance. We're looking for a huge move, though. And these bulls are making money, right? It's a nice time to be a bull. So now getting back to Jerome, and I set the tone here for SMCI. We'll look at a few charts in a minute. But to make this really simple, 25 or 50, I mentioned this yesterday and on the morning stream, I think this morning, it really comes down to a want versus a need. The Fed wants to cut, but does not need to. So I would actually prefer seeing 25 and a succession of 25 if that's what it takes. We want the Fed to cut because they're able to or because they want to. If they cut because they need to, history is no good guide for us. We don't want the Fed to be getting really aggressive. Let me just remind you really fast of what that means. It basically means that over history, the Fed usually cuts because something's broken, which means that they need to cut because they broke something. Again, negative 30, negative 50, take your pick. But if it's 1995, which I am arguing for, it means that they're cutting because they want to or because they're able to, just like back here in 1995 when they're able to. All right, now let's make this really simple because tomorrow is going to be the last day going into Nvidia's earnings after the bell. And then on Friday pre-market, we're going to be getting PCE. So what does this mean? It means that whatever the market does tomorrow is going to be the last day. Thursday is going to be the fallout from Nvidia, and Friday is going to be the last calendar day of the week and of the month. We've already talked about the significance of these weekly charts. And right now we have a failed breakout. Again, referencing yesterday over here on SMH, we got a failed breakdown. I do not want to see these things go lower. We've already tested the previous area. If we don't bounce off here, this is going to turn into a head and shoulders. We do not want to see that if we're bulls. We want to see these charts advance. We want to see them back above the 50 DMA. That's what should happen if we get a positive reaction to Nvidia. But all said and done, the market looks just fine. It's digesting the previous all-time high, but it's not quite gotten there. So it all basically rests on Nvidia. Are they going to pass or are they going to fail? So with that said, thank you so very much for tuning in. Watch the video on the left or come hang out with me at 9:15 a.m. tomorrow. Thanks so much.